On February 29, 2026, America and Israel launched a military strike against Iran, an event that most of the world was expecting. But this event caused tensions in the region to escalate and ultimately led to the closure of the Strait of Hormuz, one of the main arteries that delivers oil to the entire world. Today in this video, we're going to examine whether the closure of the Strait of Hormuz harms the whole world or if anyone actually benefits from it. Stay with us until the end of the video. Don't forget to like, comment, and subscribe. The first topic we're going to examine together is how the closure of the Strait of Hormuz changes the markets. Well, the closure of the Strait of Hormuz, as we said, given that it's one of the main arteries for delivering oil to the whole world, causes the oil supply to decrease. In the financial markets, we are fully aware of this issue. A decrease in supply leads to an increase in price. The oil supply decreased, oil became harder to find, and as a result, the price of oil increased, something that we all witnessed. But who loses out? Two sides suffered a very significant loss. China and Europe. Why was the loss for China and Europe greater than for others? Because they are countries that depend on cheap energy. When cheap energy is not available to these countries, production costs increase. As production costs increase, corporate profits decrease. As a result, the economies of America's competitors suffer a loss. What is the quick reaction of investors to the closure of the Strait of Hormuz? Well, naturally, all investors have a fear of risk. Investors become worried and withdraw their money from riskier markets. Riskier markets like crypto, and they look for safer options. Safer options like gold, the dollar, and things that can provide them with more security. But this time, the flow of money, meaning the money withdrawn by investors, ended up going towards the dollar. Investors moved their money towards the safest option, which is the United States dollar. Let's review it together again. The game changed. Oil became more expensive, energy prices increased, demand for the United States dollar rose, and this caused the value of the United States dollar to increase. Who was the main player in all of this? America. Why? Because it's both an energy seller, profiting from the rise in oil prices, and the owner of the dollar. It benefits from the US dollar becoming more valuable. Two very big benefits for America. But the main question that arises is, why did gold grow less? In crises, previous tensions, and previous wars, we saw money move toward gold as a safer option. But this time, that didn't happen. Because the closure of the Strait of Hormuz, besides moving money towards safer assets, required that safe asset to also have liquidity. The US dollar has an advantage over gold. It has both more liquidity and is a safe option. So money moved toward the US dollar instead of gold. Let's review the overall conclusion, the general roadmap that occurred after the closure of the Strait of Hormuz. The Strait of Hormuz closed, oil became more expensive, its price increased, investors got scared and pulled their money out of riskier markets. But this money moved toward the dollar. Because, as we said, it's both a safer option and has high liquidity, and America benefited. Both its oil price became more expensive and the US dollar's value increased. But the overall conclusion, the lesson we can learn from this case, is that the market isn't just a chart, it's a system. If we understand this, we'll realize where the money is heading before everyone else. Learn, discover, research, and then decide. I hope this video was useful for you. Ask any questions you have in the comments. We try to accompany you on your financial journey and teach you everything we've learned. Until next time, goodbye.